Gold price is seeing a pretty volatile trading day. Phil, we've been a 65-day range already in the morning for gold. Can this volatility really continue, and what does that mean?
Well, I think it's still going to continue for the next few days here at least. I mean, there's a lot of expectations running high that a possible QE3 could be imminent or a interest rate cut out of Europe. I mean, there's a lot of different things that are going on at the moment, especially the volatility in the Swiss franc. You're going to continue to see spillover effects into the gold market, and the ranges are going to be wide.
How much market share do you think that gold will steal from the Swiss franc as a safe haven?
You know, that's a great question. It's 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 tough at this point because we saw the 900 point or even 1,000 point move lower in the Swiss franc, and gold prices didn't really get that boost and follow through. So I think that these Swiss franc guys are actually kind of reassessing at the moment, waiting to see if there's a spot to come back in, or another currency might be favorable, like the dollar index at the moment, or going into the gold market a little bit later.
Right, which will then of course lead to more volatility. So are you trading these intraday ranges then, sort of buying on the dip, selling on the rallies?
Yeah, I mean, it's tough. You got to look at a couple support levels on the gold. 1861, I think, is a key level support. That was last night's, low. If we take that out, I think 1851 was the previous highs that we've seen, and that was a resistance point. Those two levels of support have to hold, and I would be recommending positions anywhere near those levels to get long. If the market did close below like 1840 on a closing basis, I would exit to the downside and then wait. On the upside, if we start taking out like 1925, which was the high, we're probably going to see some continuation on up to 1950. And I think that at that 1925 area, if we take that out, those Swiss franc guys are going into the gold market, and it would be confirmed at that point.
So if we get those momentum traders, does that mean that we see 2,000 before we hit, say, 1,800 again?
Yeah, I think that there's no question about that.
And what does silver do? It's not really moving with gold. I heard from a couple traders that if gold stays above 1,900, then silver will get more of a safe haven play because it's sort of the cheaper metal. Are you expecting any of that?
Yeah, the silver market, it's got its problems. It's got a bipolar personality issue where one minute it's an industrial metal, the next minute it's a precious metal. Right now it's acting a little bit more of an industrial metal. I think that if gold prices do continue to overstretch themselves up through that 1925, people will shop for that cheaper metal, and you'll probably see silver and also platinum prices come up with it.
So you think of upside now versus downside? Is that where the trend's going?
Yeah, I think that the downside on silver is extremely limited, but I think that that upside momentum in silver isn't going to come in until gold prices surge again.
All right, so look for more upside momentum and volatility for gold and silver. Thanks, Phil.